Namaskar students, welcome to GDCA College channel. I am Dr. Ashok Jogdan. Today's video is all about the rectified video of a previous one for account paper. This will be in two parts majorly. In first part, we'll be checking 50% of the questions, and in second part, the remaining questions will be there. So, why we are doing this, because previous video with musical background was really disturbing. So that is the main reason, as well as people are, there are students who are saying like, sir, we are unable to, understand or unable to listen what you are exactly saying. So in this video, there is no musical background, nothing will be there. So straightforward. Entire video will be of us around 50-55 minutes. So watch till end. This video might be helpful for you. Also watch previous video as well. So in this video, we'll check entire process of accounts. Again, I'm telling you one more time, account is not my subject, because I'll be giving you some of the positive tips to solve the questions and formats as well. So what are the formats you have to follow, and what you can do, that is very important. Again, there are some tips will be given for particular question, every question. So you should follow entire tips and all. So if you know account a little bit, you will be able to solve the questions. That's easy calculations. Again, I'm telling you, account is not my subject. I'm learning now, and I'll give you proper information maybe in coming videos, if possible, or maybe next year. But if you are able to understand by this, then it is good. If you are not, then please try to solve and refer other videos as well. So without wasting time, let's get started with.
ध्येय नवीन समोर दिसतंय, बँकिंगचं स्वप्न पूर्ण होणार.
GDCA ची साथ जिंकायची ही वाट, यशाची गॅरंटी आता सुरुवात. GDCA कॉलेज
हो भविष्य उज्ज्वल,
GDCA कॉलेज
मिळणार यश.
सहकार आणि बँकिंग करिअर घडवा खास. GDCA कॉलेज देते यशाचा विश्वास.
So this is the English version of account paper. So this will be part one. In this, we're going to see 50% of account paper, and in next part we will see the rest of the paper, in which we will check everything, the pattern analysis and every 7-day revision plan, as well as short topics and student strategies as well. Okay, so this is the rectified video of previous video which we have uploaded already on the GDCA College channel. So you must watch this video till end. So one will be of analysis of question papers of 2017 to 2025, and frequency and 8-year analysis. So what are the topics and all things covered in the this particular table. So we have formed a table to make you understand in better way topics and times asked, and year, in which year it has been asked, and marks and chances percentage, like what are the chances. Number one, final account from trial balance. This is very important question. Every year it has been asked, and this year also it will be there in the examination. That is for 30 marks, 100% you must do. Then BRS 100% if this question come. Then depreciation or machinery account, this is also there, as I told you earlier. So 100% it will be there in the examination. As I told you, in previous videos, see, if you do these three questions, BRS, then final accounts and the depreciation, so you are pass already here. Actually, you will get 50 marks if you solve all the question correctly. So rest you don't need to solve at all if you want to. Okay. So likewise, then true or false with reason every year asked, then 7 to 10 marks. You have to do that as well. Fill in the blanks every year 5 to 10 marks you must do. Short notes every year 16 to 20 marks you must do. Bill of exchange 5 out of 8 years. So 2017, 19, 2022, 2024. For 10 marks, 90% it is also important. Then the simple cash book 4 out of 8 asked 2020, 22, 23, 25 for 10 marks, 85% chances. Ratio analysis, 3 out of 8 asked on in the year of 18, 19, 20, 22 for 10 marks, 70% importance. Bill of exchange and specimen, and match the pairs. So these are the last year's expected questions. So last year bill of exchange was asked and they matched the pair. Okay. So this is the analysis of questions. So these are the topics and the questions will be there. So chapter wise marks and weightage actually we will check here. So chapter final accounts, that is trading, then profit and loss and balance sheet we have to calculate for 30 marks. It is very critical actually. You should never skip this because this is the first question and first question is compulsory to attend. BRS for 10 marks, it is also again critical for 10 marks. Easy 10 marks you will get here. Depreciation and machinery account for 10 marks, it is also critical one, and formulatic question are there. So and then bill of exchange for 10 marks, very high and predictable in coming examination. Short notes theory part, so 16 to 20 marks, very high chances to of this question. Cash book for 10 marks, then true or false, fill in the blanks and match the pair, 15, 20 marks. So there are again high chances for upcoming examination. A ratio analysis, that is for 10 to 5 to 10 marks, and medium you just learn formulas, that's it. So here again I'm giving you notes like a practical versus theory comparison for account which subject. Practical versus theory, 60 to 65% marks are from the practical questions, that is final account, BRS, depreciation, cash book and bills. These are the major questions actually. And 35 to 40% from theory, like short notes, true or false, fill in the blanks. So master the practical topics first and then think of other topics. Okay. So this is how it is going to be. Then again, repeated adjustments in final accounts. What are the adjustments actually asked every year? Closing stock every year, sure short. Depreciation every year, sure short. Outstanding expenses, salary, audit fees, wages, 7 out of 8, very high chances. Then provision for bad debts and RDD, 7 out of 8 years, very high chances. Prepaid expenses, insurance, 5 out of 8, high chances. Bad debt written off, 5 out of 8, have very high chances. Then unrecorded purchase goods in transit, 3 out of 8, moderate. And personal expenses includes in business, 2 out of 8, moderate one. Okay. Then repeated short notes topic actually here to make you understand in better way. Again, we have made a table to for better understanding. A short notes topic, year asked and frequency. Depreciation, definition, need and method. So 3 times asked and 3 years. So revision, reserve fund, types of reserve, 3 times. Cash flow statement, 2 times. Management account, scope and objectives, 2 times. Cost accounts, 2 times. Verification of assets, objectives, 2 times. Then divisible profit and dividend, 2 times. Bill of exchange features, 2 times. Accounting standards, AS 1 to 6 and 10. For these are the standards asked for almost 5 times. So you must do this actually because but do not get confused between AS1, AS2, AS3, AS6 and AS10. Okay. Income and expenditure account. These are the new expected question incoming examination, computerized accounting and social responsibilities. Okay. Then final account. So now we'll be checking out like model answers first for the final answer or final account question. So in this step-by-step approach, what will be the approach? You must know the approach. Because as I told you, account is not my subject. So that's the reason I will not be able to explain you in a better way. But still, I'll try to explain you in a, at least in good manner. So read trial balance carefully, separate debts, debit items, assets and expenses, and credit items, that is liabilities and income. Then step 2, read all 5 adjustments, whatever adjustments are given. mark each one, decide where it appears. Then prepare a trading account first. So again, if final account is coming, so trading account you should prepare first. Opening stock, net purchases, direct expenses versus net sales, and closing stock. Calculate gross profit or gross loss. Prepare profit or loss account, profit and loss account, direct expenses and in the income. Calculate net profit or net loss. Prepare balance sheet. Liability is equal to capital side and asset is equal to property or current asset side. So this is the proper steps for final account. So how to handle each adjustments again to make you understand. This is the table actually here. Adjustment, trading account effect, profit and loss account effect, and the balance sheet effect. Number one here, closing stock, which is very important. Credit side by closing stock, so where it appears actually adjustments. Then in profit and loss account, none. Closing stock will be not available. Then balance sheet effect, asset side, current asset. Depreciation on any fixed asset, here none. Then it will become in directly profit and loss account, debit side to depreciation, and in balance sheet deduct from the fixed asset. Outstanding expenses, example salary 500. Then in trading account none. In profit and loss account add to expenses, debit. Then in balance sheet add to liability sides. Prepaid expenses, example insurance 300 rupees, none in the trading account. Deduct from expenses, then in profit and loss account, and in balance sheet add to asset side, that is current. Bad debt written off, none in this trading account. Then profit and loss account debit side to bad debts, and in balance sheet deduct from the debitors. Provision for bad debts or RDD, none in the on the trading account, and in profit and loss account debit side to PBD, and in the balance sheet deduct from debitors. Unrecorded purchase, goods in transit add to purchase in the profit and loss account, in the trading account, and in profit and loss account none, and in balance sheet it will be appeared because purchase, and it will be on the creditor side. Then interest outstanding on bank loan, here none. Debit side to interest in profit and loss account, and then in the balance sheet add to bank loan liability. Personal expenses includes travel, none in the trading account. In the profit and loss account deduct from that expenses, and in balance sheet deduct from capital. So this is how you have to understand the adjustments type actually. Okay, this table which will help you to solve the accounts problem. Trading account format, actually what is the format for trading account? That is the trading account format. So how you can write or how you can draw. You make a table, debit side expenses and RS, that is amount you can write, or credit side income and RS or amount. Okay, opening stocks X whatever amount is there, and by sales credit size X whatever amount is there, to purchase X, then less sales returns XX. Whatever amount is given, you have to add that amount, and this is just an format. So less purchase return, then in the credit side by net sales, on debit side net to purchase, then on the credit side by closing stock. To carriage inwards, whatever amount is there, and to wages, motive power or trade expenses X, and to gross profit CD, it will be here actually whatever things will after calculating CD will be here in total, and here again you must balance the total. So entire total should be get balanced for the both side. So this is the format for a trading account. Then profit and loss account format, how a profit and loss account you can create. So this is just format. Okay, so debit side expenses, then again here amount, and credit side income amount. Then gross loss DB if any, whatever if given in the question. If not, then by gross profit DB X amount, whatever amount is there, and to salaries plus outstanding if given X, the amount by commission received, whatever is given, that you should add. Insurance, if 300 or 500, whatever prepaid insurance is given, so you have to reduce that one. Then by discount received, here we have to add discount. To depreciation plan building, whatever depreciation is there, by 10%, 15%, whatever amount, depend on the method used. By interest on investment, X. To bad debts or a new provision, whatever amount is there, and to discount allowed. To office rent or advertisement, to interest on bank loan plus outstanding, to net profit, CD transfer to capital, and or total. So this entire total should get matched with the here on the credit side. Debit and credit side should get matched. So this is how the format for profit and loss account. Then balance sheet format we're gonna see. So this is how balance sheet format looks like. So liabilities and assets. So in balance sheet, see, in trading account and profit and loss account, we have mentioned debit side expenses and credit side income. So likewise, we have to make sure that in trading account and profit and loss account, we will mention debit side and credit side, that is expenses and income. But in balance sheet format is different. It is not debit side, credit side. It is always liabilities and assets. So this is how it is going to be. So this is the format for balance sheet. Liabilities, capital, share capital, accounts, X amount, whatever amount is given, and the asset side, fixed assets. Add net profit for year, whatever profit is given. Building, less depreciation, whatever amount is there. Less drawing, if any, X. Then plant machinery, less depreciation. Then in reserve fund, furniture, less depreciation. In government loans and bank, debt stock, equipment. Then add outstanding interest. And in assets, since investment, NSC or share in DCCB. Then sundry creditors. Then an asset, current assets. In bill payable, then closing stock and education fund, if any, sundry debitors here in asset. Outstanding expenses, whatever expenses are there, and loss, then provision for bad debts or bad debts. What are the bad debts? Whatever calculation is there. Donation fund X, whatever amount is there. Then bill receivable, advance, cash in hand, and cash at bank, prepaid expenses. So in balance sheet, this amount should get matched with the asset. Liability should get matched with the assets. Okay, so this is how balance sheets work. So critical checks for particular balance sheet format. Both side balance sheet must be equal. So as I told you, if not equal, look for missing adjustments. Check all 5 adjustments, whatever adjustments given. And wrong side statement, calculation error in depreciation, and these are the mistakes actually you should avoid. Outstanding prepaid applied only once, must apply in both profit and loss account. Okay, so due to which this balance sheet might be different. So you have to calculate outstanding and prepaid in the both profit and loss account and balance sheet. So then it will come. So examiner tip for final accounts, always write a trading account of society name, whatever society name is given. So trading account for this society, okay, and then make a table for the year ending like 31st March, whatever year is given. So always it will be 31st March. Use to prefix like for debit entries and by prefix for credit entries. So in debit, always make mention before writing any entry. So to. And for credit entries, you should write by before any entry. Show all calculation in working notes. Working notes are very important. Mark given in even for final answer is wrong. So as I told you, like working note has marks, so you have to add, show your working notes. Closing stock appears in trading account and balance sheet. Do not forget either these things. And if outstanding salary is given, profit and loss account, debit is equal to salary plus outstanding balance sheet liability is equal to outstanding amount. So this is how you have to calculate. Net profit transfer to capital account by adding it. So these are the tips for you for a particular question. So that's also practically we can gonna see that as well. So again, bank reconciliation statement, which is very important question. Again, every year it has been asked for 10 marks, and easy 10 marks we will get here. So what is the bank? If bank reconciliation statement, this question comes, you have to write definition BRS. Definition of BRS: a bank reconciliation statement. BRS is a statement prepared to reconcile the difference between the bank balance shown in the cash book, that is the bank column, and the passbook as given on the date. The differences arise due to timing. Some transactions appears in one book but not in the other. The causes of differences. What are the causes of differences? Causes and effect on cash book versus passbook. So this is how you have to write. Check issued to creditors but not presented to bank yet. Check deposited. Causes we're gonna see now first. Check deposited in bank but are not yet credited by bank. Bank charges in interest debited in passbook only. Direct deposit by a customer in bank, not in cash book. Wrong credit in passbook by bank. Then dishonored check entered in passbook but not in the cash book. Effect on cash book and passbook after this causes, if this causes comes. Cash book shows less, passbook shows more. Cash book shows more, passbook shows less. Passbook shows more, less. Cash book shows more. Passbook shows more. Cash book shows less. Passbook shows more than its sound, and passbook shows less than the cash book. So BRS format, how the format for how is the form BRS format? How is the format for BRS? How can you make a table likewise? So these are the things. Particulars you must write for BRS particulars and the amount in debit credit sides. Balance as per passbook, credit balance, whatever amount is there. Then this is the format for BRS only. Add item that increase to cash each book balance, plus check issued to creditor but not presented for payment. Direct deposit not recorded in cash book. Less item that decreases to reach cash book balance. Check deposited but not yet cleared, credited by bank. Bank charges recorded in passbook only. Wrong creditors in passbook. Balance as per cash book debit balance. So this is the format you have to make, and then whatever entries are given in BRS, you have to do that, make that entries correctly. So bank BRS format starting with cash book balance if cash book is there, and passbook balance. For passbook balance, this is the BRS and format, and for the cash book balance, the BRS format will be different. Balance as per cash book, debit balance, then add here a check deposited but not presented, plus bank charges in passbook only, if not in cash book, less. Checks issued but not presented, direct deposit not in cash book, balance as per the passbook. So this is the format for cash book balance for BRS. So memory tricks here are very simple. So CICP rule you must apply. That is starting with passbook balance, and then add check issued but not presented CICP, and deduct check collected but not credited CCNC. So these are the trick you should remember. Starting with cash book balance, reverse the above. This one you should reverse it. Okay. So this is how you can make cash book and passbook. Examiner tip for BRS. If this question comes, what are the expectations? Always shows plus and minus side clearly. Show subtotal after adding additional or adding the amount and before deduction. Make sure final balance matches the other book balances as well. Bank charges always reduce passbook balance, so add when starting from the passbook. common mistakes in BRS. Most of the time student do adding when should deduct. Always double check your logic. Next, depreciation, that is machinery account model answer. So what is the model answer for particular question? We're going to see with the example. Fixed installment method, FIM, that is straight line method, we can say. Annual depreciation cost assets, X rate, whatever rate is given in the question, that is how we have to calculate per annum. Or annual depreciation cost, scrap, you can calculate by using these formulas: cost minus scrap values divided by estimated useful life. Under FIM, the sum amount of depreciation is charged every year. Then the question for depreciation, machinery account. So for 3 years we have to calculate, and every year it has been asked for 3 years. So they might ask you till 2025, like 2023, 24, 24 to 25 likewise. What will be the question, or what can be the question accordingly? Machines purchased for 8 lakh on 1st April 2017. Depreciation by 10% FIM. That is, FIM means straight line method, and WDV, written down value method. These are the two methods in depreciation. So do not get confused with these. Year end 31st March, sold on 1st January 2020 for 5 lakh rupees. So this is the amount. So we have to calculate accordingly. So we have to calculate machinery account for the year 2020, 2017 and 2018, debit side, credit side, and accordingly we have to calculate. To bank cash purchase of 8 lakh rupees, as it is given already, purchase, and depreciation of 10% depreciation account. So ultimately 10% of 8 lakh is 80,000 rupees, and here you have to calculate balance. So what will be the balance after minus of 80,000 from 8 lakh, 7 lakh 20,000, and so these two things get balanced automatically. For next year, that is of year 2018 to 2019. So balance here, we have to take this balance of 2017 or 2018. That is 7,20,000. Then again depreciation by 10%, and then again 80,000, because here straight line method used. Okay, so this is the fixed for the depreciation of particular amount. So 80,000, again we have to reduce it from 7,20,000. So again ultimately it will be 6,40,000 rupees, and this is the calculation. So you have to make a total as well everywhere. Credit side, debit side, likewise you have to always make sure that you will mention debit side first and credit side in the next column likewise. Then for 2019 to 2020, again we have to get that balance, that 6,40,000 straightforward in the 2019. Then depreciation for 9 months. So how 9 months? As you can say, it has sold on 1st January. So we have to calculate accordingly from April to January. So likewise, so here we have to calculate depreciation for 9 months only. Okay. Already depreciation is 10% for 8 lakh rupees. So 80,000 into 9 divided by 12. So this is how you have to calculate for 9 months. So it is coming 60,000 rupees. By bank sale proceed 5 lakh rupees, we have to sale that already given here. That is 5 lakh rupees on the machine we have sold in 2020 on 1st January. Okay. Then by profit and loss account will be, we have to minus 60,000 from 5 lakh rupees. We have to reduce this. So it is coming straightforward 1,80,000 rupees. So total was 6,40,000 here, as it is 6 lakh rupees 40,000. These are the working notes actually, which is very important. Working notes you should write in the answer. Book value at sale date is equal to 6,40,000 minus 60,000 rupees. Depreciation for 9 months, which is 5,80,000. Again, sale price is 5 lakh rupees. So loss on sale size is 5,80,000 minus 5 lakh rupees is equal to 80,000 loss or debit side, or you can say in the profit and loss account. Okay. Reducing balance method, that is RBM or written down value method. Each year depreciation is on written down value method, book value, not on the original cost. First year depreciation cost is equal to cost into rate percentage. So we have to calculate. Second year depreciation is equal to cost minus first year depreciation into rate percentage, whatever percentage is given. Third year depreciation will be of written down value after 2 years into rate of interest or percentage. So this is how it will be. Change of method. Change of method, FIM to RBM. RBM is like reducing balance method, that is written down value method. It has asked in 2017-2023 pattern already. Total depreciation from start to change the date under old method, that is FIM. Calculate total depreciation from start to change date under new method RBM. Find excess depreciation under new method is equal to debit profit side, profit and loss account, charges as extra expenses. Then find shortfall under new method is equal to credit profit and loss account, that is income. So example, like machine cost is 80,000 on 1st January 2013 FIM at 10% and change to RBM with 20% from 1st January 2015. So how it is going to be in year 2013, 80,000 into 10% is equal to 8,000 rupees RBM depreciation. 80,000 into 20% is equal to 16,000, and written down value after year will be FIM 72,000 and RBM will be 64,000 rupees. So we have to minus accordingly. So we will get these values. So if we reduce this 8,000 from 80,000 will be 72,000 and 16,000 from 80 will be 64,000. In 2014, 80,000 into 10% again same, and here also again same for the RBM format, but the value get changed here. FIM will be 64,000 and RBM will be 51,200 rupees. 20% of 64,000 will be 12,800 rupees. Total 16,000, 28,800, and then difference will be, we have to calculate difference. So we have to minus 28,800 from 16,000 rupees. So 28,800 minus 16,000, 12,800 excess under RBM. So treatment profit and loss account will be 12,800 in 2015. Examiner tips for depreciation. Always balance the machinery account, total debit side and credit side. Always write to balance and DB at the start of next year. If asset sold mid-year, calculate depreciation only for that period of year, particular 9 months, 6 months, whatever the month is coming. Under RBM, never, or WDV, never apply a rate to original cost after the year. It will get changed. Profit and loss account on sale. If sale price is greater than book value, is equal to profit, that is on credit side of profit and loss account. If sales price is less than book value, is equal to loss account, debit side on of profit and loss account. Show working notes for book value at the time of sales. So next, bill of exchange, model answers. What are the model answers for bill of exchange? Key parties in bill of exchange. What are the key parties? Party, role, and book where entry is made. A drawer, person who draw or create the bill, that is creator, draws book. Then drawee, acceptor, person who accept or pays the bill, that is debitor. Drawee, book. Then payee, person who receive payment, often same as drawer, maybe third party, depends. So standard general entries in book of drawers. What are the general entries in book of drawers? Transactions and general entries. We're gonna see transaction, credit sale to drawee, drawee account, debit X amount to sales account X amount. To bill drawn and accepted, bill receivable account, debit or to drawee account. Bill retained till due date honored. Bank cash account, debit side to bills receivable accounts X amount, whatever amount is given. Bill counted with bank account debit less discount account or on debit side or bill receivable account. Bill endorsed to creditors, creditor account X amount to bill receivable X account. Bill dishonored if retained, drawee account debit side, but whatever charges are there, we have to add that charges as well. Or sale to bill receivable account. Bill dishonored if discounted. Drawee account debit side full plus noting whatever charges are there to bank account X amount with X amount. New bill accepted on dishonor. Bill receivable account debit X account amount or to drawee account with X amount. Next, we'll see accommodation bill, mutual bills, we can say. In 2019 and 2022, it has been asked when two parties draws bills on each other of for mutual financial benefits, not for actual trade debts. So what are the entries? Let's take an example, Mahesh book or drawer or Rakesh book, that is acceptor. So bill drawn accepted will be in Mahesh books, how it is going to be. Bill receivable debit side to or Rakesh account. Mahesh account debit to bill payable. Likewise, it will be in acceptor's account. Bill discounted by Mahesh. Bank debit net plus discount, whatever discount amount is given. Account debit to BR. No entry in Rakesh book yet. Half sent to Rakesh account debited to bank account debit to Mahesh account in the Rakesh account. On due date, Mahesh pays a share to Rakesh. Then how entries will be? Rakesh account debit to bank debit to Mahesh accounts. Rakesh honors the bill, no entry in the Mahesh accounts, and bill payable to debit side in Rakesh account. Bill of exchange specimen format, how the format is going to be for bill of exchange. So this is the proper format. In the middle of the page, you write Pune 25th January 2022, IRS 500 rupees. 3 months after a date, pay to Manoj Joshi or order the sum of rupees 5,000 only for value received. So this is the format. Whatever things are there, you have to mention. Then here to Mahesh Mane, Gandhi Road, Barshi, SD Ashok Patil, Main Road, Solapur. Accepted Mahesh Mane, date 28 January 2022. So this is how the bill of exchange specimen copy is. Then short notes, complete model answers for short notes. How short notes you can write in paper number 2. Depreciation if asked. Definition you should write at any cost. Depreciation is the systematic and gradual reduction in the value of a fixed, that is tangible assets over its useful life due to wear and tear, we can say, use, passage of time or obsolescence. Need for depreciation to calculate true profit by trading depreciation as business expenses. To show correct value of assets in the balance sheet. To provide funds for replacement of worn out assets through profit retention. To comply with accounting standards AS 10 accounting fixed assets. To follow the matching principle. Expenses matches against income of the period. Method. Fixed line method SLM, that is fixed installment method, same amount every year, and then reducing balance method, that is RBD or WDV, written down value method, decreasing amount every year, higher in early years. Conclusion for the short notes: depreciation ensures accurate financial reporting and true representation of the financial position of the businesses. Then next, reserve fund. Definition for reserve fund. Reserve fund is an amount of profit net side out of the distributable profits for future use to meet contingencies to strengthen the financial position of the organization. Types: general reserve for general future use, no specific purpose assigned. Specific reserve created for specific purpose, example sinking fund, capital fund, or redemption reserve. Likewise, capital reserve created for capital profit, like profit on sales of assets, forfeited shares. Revenue reserve created from revenue profit, annual profit from operations. Secret reserve, undisclosed reserve hidden to show a conservative position. Importance in the cooperative societies. Under the Cooperative Society Act, it is mandatory to transfer at least 25% of net profit to reserve fund before declaring the dividend. This is what it is important in cooperative societies. Conclusion for reserve fund: reserve fund profits the organization against the unexpected losses, strengthens the financial position, and ensures the long-term stability. Next, see verification of assets, asked 18, 20, 24 accordingly. Definition: verification of asset is the process by which auditor physically checks and confirms the existence, ownership, validation, or valuation of the proper disclosure of assets in the financial statement. Objectives: what are the objectives of verification of asset? To verify physical existence of asset, to confirm the correct ownership of assets in the business, to ensure assets are properly valued as per the accounting standard, to verify that assets are free from encumbrances, no undisclosed charges or liens, to ensure proper disclosure of assets in the balance sheet, to prevent fraud or misappropriation of the assets. Conclusion: verification is a key audit procedure that ensures the accuracy of a balance sheet and protects the interest of owners and creditors. Next, cash flow statement, asked in 1724. Definition: cash flow statement is a financial statement that summarizes the inflows, that is receipts, and outflows, that is payments of the cash during the specific accounting period. Three activities: operating activity, cash flow from main business, receipt from sales, payments or the purchase, salaries or expenses. Investing activities, cash flow from buying, selling long-term assets or investments, like purchase of machinery, sales of investments. Financing activities, cash flow from long-term financing, bank loans, share capitals, loan repayments, dividend repayments or payments. Prepared as per accounting standard AS3 revised. Conclusion: cash flow statement helps management, investors and creditors assets the liquidity and cash generating ability of the business. Next, management accounting, asked in 2017 and 24. Definition: management accounting is a branch of accounting that collects, analyze and presents financial and non-financial information to management for planning, controlling and effective decision making. Objective: planning helps in preparing budgets and forecasting future business activities. Control: compares actual versus budgeted performance and identify variances. Decision making: provide relevant data for pricing, production, investment, and decisions. Performance evaluation measures efficiency of departments and managers. Coordination integrates activities of various departments towards common goals. Tools: budgets, marginal costing, ratio analysis, fund flow statement, cash flow statement, standard costing. Conclusion: management accounting is the future oriented and helps management take rational decision for the growth and profitability of the organization. Next, divisible profit and dividend. Divisible profit, that portion of net profit which can be legally distributed to shareholders, stakeholders after fulfilling all the statutory obligations. Principles of divisible profit: depreciation on all assets must be provided, all revenue losses must be written off, a reserve fund must be maintained, that mandatory of 25% in cooperative societies. Dividend must be paid only from available current year profit. Dividend, share of divisible profit distributed to shareholder or stakeholder in cooperative societies. Dividend on share capital is limited by laws, actually 15% max. Conclusion: correct computation of divisible profit protects the creditors, ensures legal compliances, and maintain the financial stability of the organization. Next, income and expenditure account asked in 2025. This is the new expected question. So now it's more in trend. Definition: income and expenditure account is prepared by non-profit organization, that is NPO or NGOs, clubs, trust, charitable institution, cooperative societies, to show the surplus, that is excess of income over expenditure, or depreciate excess of expenditure over income of the accounting period. So features: what are the features? Prepared instead of profit and loss account by non-profit organization or NGOs, NPOs, includes only a revenue item, no capital item. Based on accrual basis of account, surplus debit total is less than credit total is transferred to capital fund. Deficit reduces it. Prepared prepared alongside receipts and payment account and balance sheet. Difference from receipt and payment account. Receipts and payment account shows all cash transactions. Capital plus revenue, past plus current, that is income and expenditure account shows only current year revenue, income and expenses. Conclusion: income and expenditure account measures the financial performance of non-profit organizations during the given accounting period. Next, chapter 7 will be of true or false. So in true or false, we have almost we can say for 10 marks questions will be there in coming examination. Every year it has been asked with reason. We have to rewrite the statement. Let's take an example. So statements: day of grace not allowed for accommodation bill. It is true. Why? Accommodation bills are not commercial bills. No grace period in the accommodation bills. Goodwill is tangible asset. False. Goodwill is intangible asset, cannot be seen or touched. Closing stock is valued at cost or market price, whichever is less. True. Yes. AS2 principle. Shareholders are the owners of the company. Yes, it is true. Shareholders holds the equity ownership in the company. Machinery account is the nominal account. False. Machinery account is real account, tangible fixed asset. Trading account shows gross profit earned or gross loss suffered. True. Yes. Trading account compares direct income versus direct expenses. There are 3 methods of keeping branch account. True. There are 3 methods. What are the methods? Debitor method, stock and debitors method, and final account method. Trial balance is total of debit and credit balances. Yes, it is true. TB trial balance is the list of all ledgers balances and verifies the arithmetic accuracy. Goodwill is an intangible asset. True. Yes, goodwill is has no physical form. It is invisible. So again, this question might be tricky. Here we have seen goodwill is tangible asset, and here it is intangible asset. So likewise. Cash account always shows debit balance. Yes, true. Cash account can never have a credit balance. Can't split what you don't have. Furniture account is a nominal account. False. Furniture account is real account. It is a tangible asset. Debenture holders are owners of the company. False. Debenture holders are the creditors only, not the owners of company. They lend money to the company. Cash discount does not show in book of account. False. Cash discount is recorded, so trade discount is not recorded. Profit and loss account shows gross profit. False. Trading account shows gross profit. Profit and loss account shows net profit. Payment and receipt account shows profit and loss. False. Payment and receipt account shows cash transactions only. Expenditure and income and expenditure account shows profit and loss. Wage for erection of machinery debited to wages account. False. It is a capital expenditure, so debit machinery account. Debenture holders are the creditors of a business. Yes, it is true. Again, tricky question. They provide a loan to company and received fixed interest from the company. Charitable institution prepares income expenditure account. Yes, it is true. Non-profit use income expenditure account instead of profit and loss account. Trade discount is recorded in book of account. False. Trade discount is not recorded yet. Only net amount is booked. Trade discount is not recorded. Only net amount is booked. Dividend is paid out from the profit. True. Dividends is distributed from the divisible profits only. Amalgamation reduces the management expenses. True. Yes. Merged companies share management resources. Gross profit ratio is equal to gross profit divided by net sales. True. This is the standard formula actually, expressed as the percentage. Computer accounting saves times. True. Computer accounting or computer process data much faster than manual methods. Drawer is the person who accepts the bill. False. Drawer is the drawer draws the bill. Drawee acceptor accepts the bill. Balance sheet is an account. False. Balance sheet is the statement, so not account. Under RBM, that is written down value, we can say depreciation remains fixed every year, which is false. Why it is false? Under FIM, that is we can say straight line method, depreciation is fixed. Under RBM, decreases each year. So these are the true or false. You have to prepare for coming examination. So in next part, we'll see rest of the questions, and in that I'll be giving you time management techniques and other techniques for a particular subject as well. So see you in next video. So that's all about account subject. We have seen first part so far, around 7 to 8 questions in this part, and rest of the questions will be there in coming part in part 2. And in part 2, we'll check everything like paper solving techniques and do's and don'ts, mistake you should avoid, and everything we will check in the part 2. So that is also very important. You should watch that part as well. I hope this video is informative, and if you like this video, please like, subscribe to channel, and comment your suggestions. Whatever suggestions you have or questions, we'll update you or we'll give you response in 24 hours, before 24 hours. So we'll see you in part 2 with the remaining questions. Till then, namaskar.